In the next edition of It's About Money, my guest will be Chad Reiflin, and he's been a guest at our show for many times, and I'm excited to talk to you with him about the consumer protection laws. Join us at the next edition of It's About Money. Hello and welcome to another edition of It's About Money. I'm Nanette Nokan, and thank you for joining us. Chad Reiflin has been a regular at our show, and I thank you again for being here.
Well, it's great to be back as always, so thank you for the invitation, and hopefully we'll provide some helpful information once again.
And Chad, you're the Director of Programs and Grants, right?
Correct,
the
the Consumer Credit Counseling Service right
Thank
on
you.
University Avenue,
Wonderful.
downtown.
Thank you so much. So let's talk about the consumer protection laws. One of my primary interests with that, and there's many laws that go around that, is the truth in lending with regards to mortgages and reverse mortgages. Help us understand what the consumer has protecting them.
Yeah, I think the first thing for everyone to know is that there are a lot of consumer protection laws in place to keep us safe and to make sure that we're not going to be in a position where someone's going to pull a fast one on us. And they're always re-evaluating those laws and looking at them and retooling them. But there's some primary ones like the Truth in Lending Act that folks should definitely be aware of and understand how that works. So with that specifically, Truth in Lending allows us to kind of compare apples to apples when it comes to lending. So every time that we apply for a traditional loan, whether it be a car loan, a home loan, etc., there's going to be a disclosure that's required to be provided that gives specific information to the applicant so that they know exactly what they're being charged for. The finance charge, which is the dollar amount that they're paying, the annual percentage rate, or the APR, which calculates the interest and the fees, and also the total of all the payments that they're paying. So people can really key in on some of those factors and compare and see which deal is going to be a better deal.
So with that, like a car purchase or a different kind of loan, that it's fairly, as long as you spot the interest rate, the amount of interest paid, the total payments, that's easy. And then it comes to mortgages, it's a little bit more complex, right? There's a lot more things in that package.
Yeah, certainly there'd be even more that would be disclosed once someone gets further down the trail in applying for a mortgage. But even at the initial onset of applying for that mortgage, there would be a Truth in Lending style disclosure that would be provided so people can compare those key aspects of the cost of that loan, and in particular so people can look at the total of the payments. I really encourage people to look at that specifically when comparing the costs of loans, because that's going to tell you exactly what you're going to end up paying in the end.
So whether you take a 60-month loan or a 48-month loan, 15-year mortgage or 30-year mortgage.
Precisely. So on television you see often where they kind of entice people and pull them in saying it's a very low percentage loan, and they kind of compete with their advertising. But the true outpay of that loan is going to be the total of payments. So you really know what you're going to end up giving out over the life of that loan.
Got it. Very nice. So it's something that they should ask for and can take home and read, or is there a finite number of minutes that they can see that? Like if I'm buying a car and I want to take a loan, can I take my Truth in Lending home and review it, or do I lose the deal?
There's actually requirements for lenders to provide that Truth in Lending statement within a specified period of time of a loan application. So anytime that somebody applies for credit, they should receive a Truth in Lending statement. If they don't, it could be a violation of that law.
I see, I see. So basically you apply online maybe at the car dealership, and you go home with some paperwork, or at least reference an email.
You certainly should, yes.
Okay, very important to do. So be sure, as a consumer, do not be shy in asking for that disclosure.
Or at least have that person that you're working with explain to you which piece of documentation contains that Truth in Lending disclosure, so you know where to locate it and you know exactly what you're looking at, and that specifically is in your packet that they provide to you.
And so we just talked about specific loans at a time, but then there's revolving credit. Is Truth in Lending also encompass revolving credit, or that's a different animal altogether?
Yeah, that would be a bit of a different entity, but even within credit card application packages that you receive in the mail, if you get a pre-approved credit card offer, you'll see a very similarly styled piece of documentation there saying what the APR is on that particular revolving line of credit, along with the fees that you could be charged, etc.
Yeah, I think a lot of credit cards, or maybe all of them now, indicate that if you make this payment, this is how long it'll take you to pay the loan, and or how much you would have paid in interest.
Yeah, there were some changes that took place with the Card Act of 2009.
Okay.
And encompassed within that was the feature that you're describing, which I think is great, and I've been really surprised to see how many people mention that now, which is on your credit card statement, it will tell you the difference between how long it would take you to repay the balance that you currently owe if you continued to make the minimum payment or if you paid a little bit more.
Sure.
So just kind of a little educational piece for consumers to take away even right on their credit card statement.
Yeah, sometimes maybe it's overwhelming for someone to, they're already have borrowed so much money, it's hard to see it all, but then when that's summarized, it's easy to see, oh my gosh, this is how much my...
Right, we don't always picture numbers that easily in our head, so it's good to have it illustrated for us.
Yeah, I think especially important when people buy or charge discretionary expenses. People go on vacation and they charge something without really thought about how much it would take them to pay it off if they're just paying it in time.
Oh, certainly. I'm sure that we've all probably fallen into that situation at one point or another, so
Right.
having that calculation provided to us is going to be very helpful.
It's eye-opening, that's right. So there was this Fair Credit Reporting Act, FCRA,
Yes.
which included the credit reporting agencies and what they should do. Tell us more about that.
Yeah, I think a lot of folks probably be pretty interested in how that works, and it's been around for quite a while, since 1974-ish, regulating the information that can be reported and how it is maintained in our credit reports, how credit reporting agencies handle our credit reporting information, and also how creditors handle our credit reporting information. But overall, it essentially ensures that that information is accurate and that it is information that's to date. It's not out-of-date information. So that's where we hear things like how long information can stay on our credit report, if it's negative information or a specific type of information that might be on there. For example, any type of late payment or negative information can typically be reported for only up to 7 years. So there's a limit to how long that information can follow us after a period of time.
So, but be careful that if someone does it repeatedly, it's a new 7 years from the time that
That is true.
record is
Yeah.
made.
Yeah, each instance that we might have a late payment on an individual account is going to be a new 7-year reporting period, as you said.
So very important to pay attention. But basically the financial institutions are letting you know, disclosing to you what's there, and then it's up to you to check it. How does that work? So as a consumer, how do I know that my credit is being fairly reported?
Yeah, another part of the Fair Credit Reporting Act and then what they call the FACT Act amendment that came into play in about 2005 gave us the right to get our free annual copies of our credit reports through the Annual Credit Reporting Service. And folks can access that through annualcreditreport.com.
Annualcreditreport.com.
Yes.
Okay.
So through that law, we're entitled to get one free copy of our credit report from each of the 3 credit reporting agencies once every 12 months.
Got it. So really, if you want to maximize your free service, if you will, you would do it every 4 months, right? So you have the whole year that you're rotating from.
Right. You could stagger those out throughout the year, and then that way you can kind of monitor every 4 months what's taking place on your credit report.
Actually, side question, why are there 3 credit agencies versus 1 versus 5? I mean, or
I've
just-
probably gotten that question more than 100 times in the years that I've been doing this, and it's really just competition.
Yeah, sure.
They're just independent companies.
Basically reporting the same thing, but not all of us.
Nowadays, for the most part, they are reporting very similar information. They're just kind of formatting it differently or providing it in a slightly different way that a particular type of creditor might prefer.
Got it. And the rating is different too, right? The point system, or is it the
Right,
same?
so
Yeah.
the other complexity there is with credit scores, since the reporting information is formatted a little bit differently, it's going to affect how that credit score is calculated. And that's why there can be some variances between our credit scores that are attached to each of those credit reports.
I got it. So the weighting could be different. But just to clarify, when someone goes into annualcreditreport.com, they don't necessarily get their credit score. Is that correct?
That's correct. That's a good distinction to make, so I'm glad that you brought that up. So with annualcreditreport.com, we only have the ability to get our free credit reports. Getting a free credit score would be something entirely different.
And there's other websites that do that, but they're not government sanctioned, is that right?
Correct.
Okay, got it. So there's some marketing attachment to
Yeah,
it.
usually you got to give them a lot of information, right? And then they're going to send you advertisements and things of that nature. So if you're okay with that, then it's not a bad service to look into. Keeping in mind that those credit scores that you get for free are never completely accurate either. They're always an estimation of what your credit score will most likely be when you go to the bank and you apply for a loan.
And it depends on what credit agency the bank uses, because it's one of the three. So
Right.
it might mimic closer one agency, but not the other.
Correct.
Because it's in another agency altogether. I mean, like someone like a Karma credit report place is really, it's their own mechanism.
Yeah,
Close to
so
it.
they're going to get you in the ballpark.
Yes,
But
okay.
it won't be completely on point for what that score will be.
I see. So when someone checks their credit report, it doesn't impact their score, correct?
That's correct. So when we check our own credit report, those inquiries or credit checks that are done don't have a negative impact on our credit score, as it may if we apply for a loan and then that lender checks our credit report.
Got it. So if we're applying at the same time, that's kind of to 5 different credit cards, go in the mall and shop and open up all these credit cards. That
Yeah,
might not
that
be
would
good.
certainly make a pretty hefty hit on your credit score.
Yeah, not a good thing to do. Don't go shopping on the credit cards. So tell me about the Fair Credit Billing Act.
So the Fair Credit Billing Act is certainly good to know about because it helps us to avoid any unfair credit billing practices and helps us to resolve those if we do have a dispute or something comes up where maybe a payment was not posted properly that we made on our credit card, or we did not receive some goods that we had ordered when we had made a payment, or it went to the wrong billing address, something of that nature. It sets up procedures for how we can dispute those things, not incur any loss because of that dispute. And it also limits our liability in those kinds of cases where we might have unauthorized charges due to something of that nature. In a credit card, we're limited to up to $50 of any unauthorized charges.
Got it. And yeah, okay. So it's $50 is all that we have to be responsible for.
Right. And most credit card companies, decent credit card companies won't charge you that either.
Yeah, right.
Because they don't want to.
Lose your business, yeah.
Right. They don't
That's
want to
right.
upset their customers.
Yeah, that's good. Now, in a case where somebody has mailed their check, but then the lender does not find says that it's not credited, but the check has been cashed, that's part of consumer right, to be, because if the lender had not credited the account properly and they had marked your credit record, then they need to correct that. Is that right?
Right.
Okay.
So as soon as that was discovered, a consumer would have 60 days to actually submit a written dispute.
Okay.
And then by law, under the Fair Credit Billing Act, that creditor would have to investigate that and respond within 30 days.
And how automatic is that? So let's say there's a dispute, but they had cashed the check, 30 days earlier, but then they can't locate the check. So then, do you know if the bank typically lets the consumer agency know? And how quickly, or is that something that they try to resolve internally, or you have to check yourself?
It's probably going to take a little bit of follow-up, to be honest.
Okay.
As many of these things do, because of course, when companies have to follow these laws, it really comes down to how well it's enforced.
Good, true.
And not all of them can be enforced, right down to the final degree. So consumers do have to enforce their own rights in many cases and utilize all the resources and tools available to them to do that.
And it's actually a very good thought, is that make sure you enforce your own rights, because you're really your own best watchdog.
Right, and I think that's probably one of the strongest points of talking about this in this segment, is so people can be empowered in understanding what their rights are, because if we don't know what our rights are, they don't get automatically enforced. We have to make sure that we can voice those rights and use the proper channels to get them working on our behalf.
Great, that sounds good. And then there's the Fair Debt Collection Practice Act. What is that
Yes.
about? Like no one knocks at your door and takes your possessions, or how does that work?
Yeah, so the Fair Debt Collection Practices Act protects us when we are receiving communication from an actual debt collector. And what that means is a third-party individual who is attempting to collect a debt for a creditor. So an actual creditor, for example, if we have a debt with JCPenney's, and JCPenney's is contacting us regarding that debt, they actually don't have to abide by the Fair Debt Collection Practices Act. Many creditors do, just out of good business practice, but officially they don't have to. But if we receive a call from ABC Debt Collection Agency, they have to abide by the Fair Debt Collection Practices Act. And not a lot of folks are aware that there is protection in place and how strict that protection actually is. And the overall theme of the Fair Debt Collection Practices Act that's good for people to remember is it prevents any misleading or deceptive collection practices. And that encompasses a lot that could go on. It also prevents collectors from using any abusive or profane language over the phone or any type of harassment.
Yes.
When they're collecting, they can't call and threaten violence or
my
threaten something that they really legally can't do.
Yes.
So it
interesting.
really sets up quite a bit of protection, actually.
Okay, so it sounds like there was some disrespect going on among different parties, so I had to incorporate that. And then I think you alluded to this a little bit, but there's the Credit Card Accountability, Responsibility, and Disclosure Act.
Right, so that's the one that I mentioned before, known as the CARD Act. Came into play in 2009, and it was a way to kind of address some of the issues with credit cards and fees and things that were a little bit hard to understand why it took place or seemed a bit arbitrary within that lending process in particular. So most notably is with interest rate hikes. So years ago, a consumer could get an interest rate hike on their credit card for almost any reason it seemed like. So they set up parameters as to what reasons constituted an interest rate hike, when a creditor could really put that in place. And a lot of that comes down to a number of missed payments, etc. With that, they also have to notify consumers within 45 days of a pending interest rate hike. And every consumer has the ability to regain their previous interest rate if they make 6 consecutive on-time payments.
That's great. So it's nice that there's you be responsible and you'll get some protection.
Yeah, I think it just kind of created a little bit more of a level playing field and a little bit more trust in that whole arena of credit card business.
That's great. Well, thank you, Chad. We'll take a quick break. I'm with Chad Reiflin, who is the Director of Programming and Grants at the Consumer Credit Counseling Service of Rochester. We'll be right back.
So, same time next week?
Well, of course. Put away a few bucks, feel like $1 million. For free tips to help you save, go to Feed the Pig.
And we're back. I'm Nanette Nokan. It's About Money. I'm here with Chad Reiflin. He is the Director of Programming and Grants at the Consumer Credit Counseling Services of Rochester. Thank you again for being here, Chad.
Thank you.
So let's talk about something current that's going on with Consumer Credit Counseling Service. First, I want to ask you about the program that you guys are doing with Oasis, right?
That's correct.
Tell me more.
Yeah, so this is something that we're really excited about and something that we are happy to talk about because I think that not enough folks have a full understanding of what a credit counseling agency typically does. Traditionally, they think of folks who might be struggling to repay their credit cards and need to get out of debt, or that you only go to a credit counseling agency if you're in trouble. And really, our overall mission is to help folks to build financial wellness and peace of mind in their lives. And one of the largest components of that mission is to provide financial education. So a program that we are happy to be providing is in partnership with OASIS, as you mentioned, which is the Office of Adult and Career Education Services through the Rochester City School District. So they do career and technical education training for adult students and for many students who might not have their GED or need to get their GED. And they do certified nursing assistance programs, electrical programs, lots of great trades, and have a great success rate for getting people right into employment. So we're going to be partnering with them to provide a scholarship program, and within the requirement of the scholarship, students are also going to be able to receive some financial case management through consumer credit counseling. So as they're on track for their career and to improve their financial position through their income, we're also going to help them to get on track with their financial goals and provide support to them in that realm as well.
So the student would have to apply to get that scholarship so they can get the service.
Yep, students are going to apply online and through OASIS, and they'll be selected and entered that way.
Oh, fantastic. Great. That's really exciting. I mean, I think that often people just think of the income side and they don't think about the expense side and using credit wisely and you allocating your income to have a spending plan so you don't get into trouble.
Yeah, we're kind of excited to see, for the first time, both of those ends of the spectrum come together, right? So, the importance of earning a good income, but then also the importance of what we do with that good income that we receive. Because over the years, we've experienced many folks who've come through our doors who have a relatively good income, but still, are having some issues being able to take care of certain things or reach the goals that they have. So we're looking forward to some of the outcomes that this program might demonstrate to show how powerful it can be when you bring both of those efforts together, because they really intertwine, so heavily.
Yeah, very nice. That's great. That's wonderful. It's nice that all these good projects that the Consumer Counseling Credit Service is doing. Now let's talk about something that's fairly new in end of 2014, 2015, and that's the new credit card processing that's happening. When first people are getting their credit cards with a chip on it, right? So tell me more about that. What does it mean for consumers? What does it mean for retailers? And
yeah, I think this is very interesting. It makes a lot of sense. I was just mentioning a moment ago that I just received a new credit card in the mail to replace an older one that I had, and it had a microchip on the front. So I was very surprised to see that just automatically I received this new card with the microchip. I think what the credit card companies are hoping is that this is going to be the new level of security for credit cards. It's no secret that over the past couple decades here that credit card fraud has just ballooned and exploded, and it's become more and more prevalent as just the average day-to-day person has more capability with technology, etc. So with the microchip, it's going to contain information that's encrypted, making it really difficult, almost impossible, for that card to be counterfeited or copied. Currently, with the traditional credit card that just has the strip on the back, the magnetic tape, that is very easy to counterfeit if someone has the right resources and tools available. So this microchipping is a way to kind of combat that and make things a little bit more secure.
yeah, I think it's great. There's a lot of companies that are getting into it. Like I'll mention a company just because it's a big player at the moment, and that's Apple Pay. Having your phone process your transaction through that, so it's similar to the microchip, the chip that's in the credit card, giving random numbers and encrypting it so that it's not easily sold. I thought that was pretty interesting because you would think that there would be additional costs to the retailers, but apparently the banks are partnering with the companies that are providing this service to reduce the overhead and keep the overhead the same, because they feel confident that the amount of money that will be spent on fraud will be limited. I also read that the burden of proof now, or burden of rectifying the situation, will be on the creditor rather than on the consumer side, rather than the bank. So if something goes wrong, the retailer, if they had an old processing point of sale readers, that basically what would happen is that it would transfer the cost to the retailer.
Right, they're kind of, almost reverse incentivizing folks to make those updates to
Right.
their internal systems so that this can take place. And apparently this is a lot more prevalent in European countries. They're a little bit further down the road with the implementation of this type of technology. But it's gone very well, and they've had a lot of success. So they're fairly confident that it's going to work well.
Yeah,
in
and
the
I
US.
think if you transfer the penalty to the organization that will have to bear the cost, or carry the burden of the cost, then you'd have 100% compliance, you'd think, right? So
Yeah.
no one wants to carry that burden. The bank's saying, okay, enough already. If we're responsible for what you did not take care of, something's wrong in that model. So if we just adjust it, that would be so much
Yeah,
easier. So
definitely.
So what are other new things going on at the Credit Counseling Service? Are there new other programs? The Oasis program, I think, is magnificent. And you have some ongoing things also that are quite popular.
Yeah, another new program that we started up back in the fall is a partnership with the Rochester Public Library. They received a grant through FINRA to provide a financial education program for a refugee population that they serve at their Maplewood Library branch. At their Maplewood Library branch, they provide amazing programs, and they have done a great thing in that community. And for a fair amount of time now, they've provided English language classes for new entrants into our country, mainly refugees. So the partnership consists of us providing classes on how to establish your finances here in the U.S., while at the same time those students are learning the English language that revolves around managing your finances.
Oh, that's fantastic.
And we're doing that in partnership with their instructors, their volunteers there, who have done so many great classes over the years, and it's been going really well.
Very nice. It's a great partnership when you can start the immigrants in a way that are refugees, in a way that lets them gives them the information to traverse through the financial, net web.
Absolutely.
If
I
you will.
mean, it's such a complex thing for the average citizen,
Anyway,
right? As it is.
Yes.
So imagine coming in with a language barrier,
Yes,
and then
right.
having to figure out some of those things. It's very easy for a lot of those folks to find themselves in an unfavorable situation, whether it would be due to someone's ill will or not. So we're hoping that it's really going to empower people to avoid those types of situations where they might find themselves in a scam or in a situation that's just unfavorable.
Sure, predatory lending and practices
Absolutely.
unfortunately still exist from time to time. So that's great. Those are wonderful things. And funding comes from different sources. Like you said, this was a grant from FINRA, right?
Right. So our funding sources are quite varied. And on our education side, we look for a lot of grant opportunities and look for partnerships. Almost 90% of the programming that we offer on the financial education side is in partnership through an organization which we've helped to obtain some grant funding to provide that program.
Sure. And basically at the end, all the financial institutions want to have financial responsibility among the people that they loan money to, right? Because it increases the repayment.
Right, certainly. I think that's what a lot of financial institutions are adopting as their overall motive for wanting to see more financial education promoted in the community. And there's a lot of great financial institutions locally who are really putting their hand to the plow and getting in on this work, and have actually co-facilitated some programs and workshops with us. So we've been very thankful for that as well.
That's great. Well, Chad, as usual, this has been a delightful conversation. I do appreciate you spending the time with us, and that you keep coming back, because we have lots to talk about every time.
I believe we certainly do, and we want to thank you again for having us.
And thank you, our guests, for being watching our show. My guest is Chad Reiflin. He's the Director of Programming and Grants at the Consumer Credit Counseling Services in Rochester. Until next time, I'm Nanette Nocon. It's about money.